So I just wanted to explain what we're going to talk about today. Now you can always email me, guys. This is like a email that you should definitely use. That one. Otherwise, if you use any other one, it'll go to my team, and who knows if I'll actually see it. But if you do use that one, it'll go to me. So definitely use that email. All right. So engulfing candles. Now, what's interesting to me about engulfing candles? Now I'm looking at a midnight GMT chart here. I typically don't use the midnight GMT chart. Sorry, I was a little bit further away from the microphone. I apologize. I'm going to stay right on it so the sound stays good. So I usually use a New York 5 p.m. close on my charts, but I've got this midnight GMT close chart here, and I've got a new computer. I'm just moving all my charts over here. So I'll get it set up, but on the daily chart, it doesn't matter. The biggest difference, obviously, if you don't know the difference, you'll see these little 2-hour candles on the midnight GMT close chart, like that. These are Sunday candles that last 2 hours. Otherwise, if you have a normal, well, what I consider a normal 5 p.m. New York time close, which of course is 10 p.m. GMT, then you won't get these little Sunday candles. You actually have just Monday through Friday normal. You don't have the sixth candle, which is that little 2-hour thing that you kind of have to ignore when you trade these charts. Now, we're talking about engulfing candles. Now, engulfing candles, there's a lot that's said about these things. It looks like we have a few interesting ones kind of like right now. I'm not exactly sure. I'm looking at I don't pay a lot of attention to the news because I'm a technical trader and I trade the higher time frames. So I could just consider the news to kind of push me in the direction or whatever. But I don't really see why the pound is I don't really see why the pound is moving so strongly. In 12 minutes, Theresa May is going to give a speech, but I guess that's what it is. It's like people anticipating that. I don't know. So it's kind of weird to me. Anyway, let's talk about the engulfing candles, since that's what we're here for. I have a few rules that I'd like to share with you and a few things that I've learned, and I think these might help you. If you've never traded engulfing candles, you should at least test them once. I found that what I call the big shadow, which is a derivation of the engulfing setup, and derivations of that some of my students have come up with, are some of the easiest to follow and most consistent trading strategies that you can find. Let me state that another way. Engulfing candles are awesome. You just have to know what to look for, okay? So I've had traders show me students that have said, look, I just take every engulfing candle on the chart, and it's like an always in the market system, and that system seems to work. I've had traders use engulfing candles that aren't even really what I would consider very good, but during a strong trend, that seems to work for them. And then, of course, you can use them as reversals, which is kind of my favorite way to do it, or confirmations after breakouts, which is another brilliant spot. I'll show all of these to you right now, and we can look at the live markets. Okay, does that sound good to everyone? Are you cool with that? I'll just take a sip of my special vitamin concoction, and you guys let me know if that sounds good. If you want to go over several different setups using the engulfing candle and the optimizers, and then we'll look at the live markets. Okay, it looks like we're going to get some action anyway because the pound's going to bounce around like a Mexican jumping bean, so that's kind of exciting too. So let me know what you think about that, and I'm going to take a sip of my drink here. Yeah, so it's going to be, wow, look at that. Pound's going crazy. It's going to be pretty fun, guys. Hey, Kareem. Glad to have you here, buddy. Look at that. So the interesting thing about the pound here is that it's pushing up here against this zone like it wants to break out. See how the clue here is this trend line. See how it's doing that? That's usually a breakout. Like it's gonna go higher. And I think the move down is kind of like a little fake out, really. It's trying to fake us out by making a spike down. I think people are sending it down, but I don't know. We'll see. We'll see what happens if it does pop. Usually though, when you get this trend line, the only thing that I don't like about it is normally when you get the trend line and the horizontal level like this bullish breakout, usually what you'll see is a couple of touches before the breakout. This didn't really make it to the zone. It's a little bit shy of the zone. This one did and this one did, but normally you'd see another one maybe in the middle here, like this move up would have gone all the way to the zone too. So that's the only thing that I don't like about this. It looks like a normal squeeze play, but it should have had another touch somewhere in here, you know? And that would have been a really nice squeeze play had that happened. Okay, so I'm going to go over, does anyone have a chart that you want to use? I'm happy to use any chart that you like, but what I want to do here is show you the rules that I use of the basic big shadow, and then we'll go into more advanced ones. Okay, so typically and if there's a currency pair you want to use, we can use yours too. But I want to show you kind of how I trade these, and I do trade them, and I do love them. They're awesome. This is the Pound Aussie Daily. And you know, people are going to say, well, there aren't enough trades. Well, the thing is, if you watch like 25, 30 pairs, there's plenty of trades. There's plenty of, and you can always take more trade. If you want to take a lot of losing trades, you can always find an excuse to do that, you know? All right, so let's talk about, no. Let's see if we can find any of them here. No. Don't see. What I want to do is find like a textbook example for you. Maybe we should look to the euro for that. Let's see if we can find a textbook euro example. I haven't traded the euro very much lately. It's been a little bit sloppy, so maybe we'll have a look at the euro here. Let's see. This is the euro 4-hour chart. Okay, tell you what I'm going to do. I'm going to go to pound yen. Pound yen's really ugly right now. Pound yen's too messy. Here, let me see if I can find a better chart, guys. Sorry, apologies. I should have. Usually they all pop out anywhere, but let me see if we can find one, for example, on the yen daily chart. We'll do that. Okay. Yen daily chart happening. What's happening? Okay. All right. Okay, I want to draw your attention to this candle right here. Here's what's interesting about this. This candle, a lot of people would see, okay, let's just say that we don't know what's going to happen to the left of the chart. So to the right of the chart. So we're on the far right edge of the chart and we see, boom, market's falling, prints a bearish candle down here, and then bam, prints this bullish one. That would be, for most people, a bullish engulfing candle, and that would be a buy signal. And for me, that would not be an example of a big shadow. In other words, it is not the type of engulfing I would take. Does anyone know why? What's wrong with it? And again, there's no cheating by looking to the right to see what happens here. But why would I not take this 2-candle setup? Why? What's wrong with it? I'll take a look at the EuroCAD. There's a EuroCAD weekly one actually that I got in on. We'll look at that one definitely. But why is this not a good trade? Like why do I say no? Why? What's wrong with it? Any ideas? Anybody? I know there's a delay on here and I get impatient, but and it takes time for you to pound out your answer, and there's a delay. So by the time I say this, it takes a while to get to your computer, and then you've got to type the response. But the main concern I have with this candle is, let me show you. If I hover over this candle, you'll see the low. The low is 112.55. And the low on this candle is 112.62. 112.62, 112.55. So this candle, the first candle, is actually 7 pips lower than the second. And one of the reasons why I like to trade the big shadow, the rules are, and I'll give them to you right now. The 2 candles print on the support and resistance zone, which we don't really know if that's the case here. It looks like it's a pretty good zone, actually. It looks like it's a pretty solid level, actually, if you look at what happened over here. But I don't know. I haven't scrolled to the left. I don't know. But that's the first rule. So maybe this one fits. But the second one is that the big shadow has a higher high and lower low. In other words, it completely engulfs the prior candle because it has a higher high. Now, of course, this candle does have a higher high at 114.82, and the candle here has a high at 114.26. So it's got a really high, which is great. But the lowest low is not on our engulfing candle. It's not on the white candle here. It's on the red one. So it does not have a lower low than this candle. And the reason why that's critical to me is because I want to see that the market tried to go lower. If I have a buy signal, which this would be, I want to see the market try to go lower and get rejected on my signal candle. I want my signal candle to send it lower and take out those people who are the trend followers and the breakout traders who have all their orders down here after the end of the day. I want my signal candle to go down there and cash them all in and then stop them all out and rocket back up. If the big shadow candle itself, which is what I'm calling this big white candle, the previous candle doesn't really have a name. It's just kind of the previous candle. But if the big shadow itself does not have a higher high and a lower low, then it's no good. Okay? Number 3. The big shadow is the largest candle of the last 6. Okay? It could be the last 10, it could be the last 7, it could be the last 20, whatever. It needs to be a big candle relative to the other ones. And so the only one here that would even come close would be this one. That one's about 270 pips. And this candle here, the big shadow, is about 238. So it's bigger than that one, that one, that one, that one, that one. So it's the biggest of the last 1, 2, 3, 4, 5. But it's not bigger than this one, I don't think. If my math is correct, I believe that the range of, in other words, we're talking about the range here. The range of this one is about 265, and the range of this candle is about 240, so it misses out. So it is the biggest candle of the last 5, but not of the last 6 or the last 10 because of this candle. That one wins. And then we also want to see that the market trades higher and takes out the high. So we're talking about the bullish big shadow here, not the bearish one. The market has to trade higher than the big shadow. So I always put my buy stop above the high of the big shadow. And then, of course, you have to add the spread when you're buying, right? So I add the spread, and I put it like 6 or 7 pips above the high of that, and I add the spread, okay? And that, if it doesn't trigger in 2 candles, it's trade over. Yeah, maybe this is not on a support and resistance level. That's cool. I just wanted to, yeah, I agree. I think probably like this chart, a better resistance level would be here, and another one might be down here. Like that might make sense to me, given what we see over here in February 2016, and maybe that didn't really happen here. Like it's not happening, but I just wanted to give you the rules here. So is everyone clear on the rules? The two candles print on a support and resistance zone. The big shadow has a higher high and a lower low. The big shadow candle is the largest candle of the last 6 or the last 10. If you want to, here's an optimizer for you right here. If you want to trade the best ones, spread this out to the last 10 candles. Okay? And the market has to trade higher than the big shadow. Now there is a caveat for rule number 3, which is this. Huge candles will retrace and are not good signals. Okay, so even though we want to be the largest candle of the last 6, like here's how you test this. Okay, you might have to use an indicator, even though I cringe, but I'm just going to give you an example of what you might do here using the average true range. Okay, I've got the daily chart here, so I might look at the last 10 days. Okay, which is the last 2 trading weeks, and I see that the average true range is about 146 pips. Okay, so it's okay if my signal candle is, I think it is 100 and, sorry, what was it? What did we say it was? Was it 240? Yeah, it was about 250 or whatever, 260. So if the average candle is 146 pips, which is what this is telling me right here, of the last 2 weeks on the daily yen chart, then to have a 260 pip candle, that's cool. That's fine. No problem. But if my average true range is telling me 146, and this is a 600 pip candle, clearly it's going to be the biggest candle we've seen in the last 10 candles or whatever, but it's too big. And when it's too big, you're going to get a retracement. So even if it comes good, which may not happen, you're going to be stuck in retracement land for a long, long time. Let me see if I can get, well, the best example probably of this to really drive home the point would be the Swissy. Everyone know what I'm talking about? Here's the Franco-Geddon candle for those of you that missed it, or I don't know if you were trading or you don't know, or you go back and you look at yours and you go, wait a minute, what happened? Well, these are normal candles here, normal size daily candles on the Swissy. Here's a big one that's too big. Okay, when you see something like this, even if it's not a big shadow, but if it was a big shadow, people will be like, yeah, sweet, I'm going to sell short now. Awesome. Look, it spent like a year retracing the candle. You know what I mean? And that's pretty typical. That's an extreme example, but that's what I'm talking about here. So when I'm looking for these suckers, I'm not going to get in on a huge candle. If the average range is about 150 pips, which is what we have here, 260 is fine. That's great. That's perfect. But a 600 pip candle, even a 550 pip candle, like a 490 pip candle, those are probably a little bit too big. You don't want them to be too big. I certainly don't like taking small ones, although there is an exception to that rule as well. But typically, if we're looking for a reversal bounce, a swing trade, you want to see it bigger than the average range, but it doesn't have to be like by a factor of 4 or whatever. That's not what we want to see. BS is a big shadow, which is a special case, Aldo, of the engulfing candle. So it's in the book Naked Forex. I don't know if you've read my book. It doesn't really matter. We're going to go over the rules right now anyway. But the main point here is that if you're going to trade these suckers, I would encourage you when you do your testing in Forex Tester or however you test new strategies, that you keep in mind rule number 5. And let me see if I can actually find an example here of what I would say is like this. This would be a perfect one. This candle right here. Now look, this is an example of what we would call like an excessively large candle that would not, and it's not a big shadow. It's not an engulfing. It's not anything, right? But if it was, And because it's so big, the range on that is what? It's a 700 pip candle, okay? And at this time, the average is 293 pips. The reason why the average is 193 pips is because of this candle really pulled up the average. But even before that, if we looked at day before that, what was the average? So the day before that, the average was down here at about 133 pips. So if the ATR is sitting at 133 pips, and then all of a sudden you get a 700 pip candle, that's like a no-go, right? That's like a deal breaker. So that's what I would say. Here's an example, another one. So this is a bearish big shadow, okay? That's a true bearish big shadow. It's on a resistance level. It completely engulfs the prior candle. I believe it has a higher high. 111.88, 111.75. Yes, it has a higher high. It has a lower low. Clearly, the very next candle even traded lower. But I wouldn't trade that one. And here's why. If I go back and I look at what the average true range is, even after the average true range bumps up really hard because of this big candle, it's still at 128 pips. The average true range is 128 pips, and my candle, my big shadow candle itself, is 420 pips. Okay, that's too big. It needs to kind of, it can be bigger than the average candles, but it needs to kind of fit in with, what things have looked like lately. It shouldn't be that big. You can see exactly what happened here. It went a little bit lower out to the big candle, and then that was it, and it retraced. It actually, the stop loss is above the, so again, when you're trading these, the stop loss is on the other side. So whereas the order is a few pips below the low, you don't have to add the spread for a sell trade. Stop loss above the high. It actually would have survived this pullback, and you would have been good for even some more pips down here, which is nice, but that's not always the case. And if I see a candle like that, I'm not going to take it. I'm going to expect that it's going to retrace. It did retrace almost 100%, in fact. And then you would have survived that retracement. But normally, they're really not good. It's not a good idea to get it. And here's another example. Again, it's a giant candle. It completely engulfs the prior candle. But the market doesn't trade higher, so it lets you off the hook here. Because the market doesn't trade higher here, this candle, this trade is a no-go. Does everyone see why it's not a no-go? Because the next two candles didn't trade higher. So the buy order would have been right around here, right? Right around there. And it's never triggered. So it never happens. So there you go. The book is called Naked Forex. My name is Walter Peters, and the book is called Naked Forex. You can find it on Amazon or whatever. Okay? I would give you a free copy if I could, but I don't own the rights. The publisher owns the rights to the book. It doesn't really matter to me. I get like 50 cents a book. It doesn't matter if you buy it or not. I'm just going to show you one of the systems in the book, okay? All right. So let's roll. Let's get into more advanced. So hopefully the basic big shadow makes sense. Let's get into more advanced ones, okay? Let's do that. Now, I want to talk about some things here that are a little bit weird, and you're probably going to want to test them to make sure. So whereas with the normal big shadow, the stop loss is on the other end, the buy stop is above the high, add the spread for a buy. For the sell, you don't have to add the spread. And the big shadow candle has to be the biggest candle of the last 6 candles. It's on a support and resistance zone. All that's great, right? Now let's talk about a special case. Let's find, where's the kiwi? Is the kiwi here? Well, this is actually a big shadow right here. Here, let me zoom in. I think one of my trading buddies actually took this one. Let me see. So 68 pips. I don't know if it's the biggest candle though. Oh, it is. It is. So this is the biggest candle we've seen in the last 1, 2, 3, 4, 5, 6. But I don't like it. And the reason why I don't like it, why is this not a, why does, and I'm talking about this setup right here. Why is that no good? What's wrong with it? We just went over the rules. Why is that one no good? Any idea? Any idea? Why would I mean, it's got a higher high, it's got a lower low, it completely engulfs the prior candle. Why is it no good? What's wrong with it? Any ideas? The main reason why this candle does not fit my big shadow rules is it's a bearish candle. It's not on a resistance level up here. It's between support and resistance. So it's in no man's land. And for me, that's a no-go. So I wouldn't take it. And, you know, if it had printed up here, that would be much more tempting. The other thing that I want to show you is, you know, I like to have my big shadow have some space or some room to the left. Now, this is kind of a weird concept. And if you're going to use big shadow with swing trading, then you want these two candles to kind of print out an area of the chart where you haven't seen much price action recently. And that's the case here. Because remember, it's a two candle formation. You got the candle before the big shadow, which is this little white one, and then your big shadow candle right there. So if I pull the area of those two candles that's unique to those two candles and doesn't include the prior candles over here, and I pull that across like that, I should see a lot of space there. I shouldn't run into a candle or two almost immediately. So that this one's got that going for it for sure. But what I don't like about it is it's not on where I have my resistance level up here, so I wouldn't take this one, even though it would be in profit right now. I would definitely not take that one. So hopefully that makes sense. So that space concept is very important if you are looking at reversals or swing trades, okay? Now, if you're not looking at reversals or swing trades, if you're trying to go with the flow or go with the trend, then what you would probably, you know, what you're going to end up doing, probably most likely, is you could be trend trading, okay? And let me see here. Yeah, okay. Yeah. The Kiwi's been kind of in a nice, you know, kind of in a nice trend. What you'll find is that once you, if you've been trading a long time, you've probably already seen this. But what you'll find is that you'll get these strong trends that aren't very volatile, and the candles are really big. Okay, and what happens is the really big candles hit, you know, push the trend in the trend direction, right? And then it goes through a retrace phase. Now, when the retrace happens, sometimes you'll know that the retrace phase is over, which is what I'm doing here. I'm drawing these little green trend lines to capture the retrace phase. Sometimes you'll know the retrace phase is over because at the end of it, you'll get a nice big fat engulfing candle, okay? Now, sometimes these candles aren't perfect, but I'll tell you what, oftentimes these candles can signify that the end of the retracement is over and that it's time to jump back in on the trend. And so trading these can be very fun. So what I've highlighted here is one that is not your typical big shadow. It doesn't have any room or space to the left. It doesn't even have a lower low than the previous candle, which, as you remember, that was one of our rules. But it's fairly close to an engulfing candle because it's a big candle. It closes right on the low, which is what we want to see. Whereas all these candles kind of close in the middle or in the upper part of the candle. Because why? Because it's a counter trend move. This whole move here, from this, pretty much from this white candle all the way to this candle that I've signified with the arrow, all of those candles are retracement candles, just like all of these candles are retracement candles until you get this bearish one. So sometimes what happens is here, you'll see a bearish engulfing candle, like a bearish big shadow that doesn't quite fit the rules. This one doesn't trade lower than that candle, but to tell you what, it's a pretty fat sign. Like given all these wicky candles here that are kind of closing near the high, and then all of a sudden you get this, that's a clue that the market might fall, and it did. So what might we be looking for right now on the New Zealand yen? Well, the same kind of story. if we retrace up here for several days, eventually we may see a big fat bearish candle. It may not be a perfect big shadow, but it could tell us that, yeah, the market's getting ready to trade lower again. Now, this is what we call like trendy big shadows. A friend of mine has built his whole, his whole empire just on this trade that I've shown you. And he's done very, very, very well, extremely well for himself and all of his clients by trading in this manner. And it's a really simple way. You're going to have to find your own way. I can tell you that I think one of the issues I have with it is I was really restrictive in the way that I approached it because I wanted every big shadow to be perfect. And that's not really the idea. The idea here is for the market to tell you when exhaustion is when it's over. You know what I mean? When the little retracement move is over, and then you get back in. So, are there any questions about this? Does this make sense? I'm going to leave it here and let you guys post some questions if you have any. Obviously, these big shadows aren't going to have any space because there's going to be lots of candles to the left because it's a trend. Okay, and obviously they're not going to be perfect. But I'll tell you a couple of clues that I'll look for here. If you're drawing your little trend lines like I have here, look for them to close below the trend line if possible, or look for them to close right on the low if it's a downtrend, or right on the high if it's an uptrend. Obviously, if it's an uptrend, you'll have trend lines that capture the highs, right? So you're really kind of what you're really trying to do here is see that candle that finally says, okay, it's over. The move is done. The retracement is over. Let me know if you have any questions on this. Making sense? Yeah. So this is different to the swing trading. It's more of a trend continuation pattern. And again, you always are looking for the end of the consolidation. So this kind of move here, whoops. See this? This is a retracement move. Little bit of that's kind of a retracement move that came back up to hit the trend line, which it often does. Here's another retracement move. Here's another retracement move. And we're in one right now, right? So once you get used to seeing these, you'll see what they look like. And you just need that big bearish candle that probably engulfs the candle prior to it. Even if it's not a perfect engulfing, like this one just barely missed going lower. That's a good sign that the trend is over. In a trend, you're looking for bearish engulfing too, if it's a bearish trend. If it's a bullish trend, you might be looking for a bullish engulfing. So, for example, let's see if we can find here. So here's the yuan, which has been in kind of a really strong trend. I know it's not now, but it has been. And with the yuan, what you want to see here is when you see that retracement mode, where's the bullish big shadow? We don't really get one here, do we? Get a little, what we would call a kangaroo tail, but that's a different system. Here's one. Here's one. So this is actually a belt. But see this candle right here? So this is the bullish trend. US dollar against the Chinese yuan. And you can see this candle right here pulls back. And then you get this bullish candle. That would have been a good one. Now, you might have been stopped out on the next one. In fact, if I was triggered on the next candle, I would have been stopped out. I actually don't think I would have been triggered. In fact, I don't think I would have been triggered on two candles. So I probably would have been a no trade for me. Most likely, it wouldn't have been triggered. But here's another one right here. You can see the market's gone up. It took out the high over here. It's gone higher. It pulls back, and then what does it do? Bam. Prints a bullish candle right there. It engulfs the body. It doesn't have a lower low, and then the market does go up from there. Now it falls, and now we're basically in utter, like, no man's land. It's not going anywhere at this stage. It's got no direction. I'll show you the Euro CAD. This is a bearish big shadow on the weekly, right? So you can see here the market's moved up, the weekly chart, it completely engulfs the prior candle, and then it's already traded lower. Now it's in a bit of a drawdown now, but it's not that big of a deal because it's a weekly chart. It doesn't matter. You know, these things take a long time. But this is an example of what I would call a weekly chart. You guys see the pound yen? No, we can look at it. Pound yen. Nope, we didn't see the pound yen. I think I mentioned at the beginning of the webinar, though, JZ or whatever, that I thought that the pound was going to break out and go higher. And it looks like it's doing that. So what we were seeing is kind of like a fake out move lower. And because we had been squeezing up against this horizontal level, I thought it would break out. I know May is talking right now, right, as we speak. So she's got her little speech going. So that's probably why we saw some of this. The stronger the time frame, the more valid the trade. Well, I'm always going to go with the weekly over the 1 hour. Yeah. And typically, if you test this yourself, you'll probably see this. Most of my students, when they test these systems, they do find that the higher time frames give them a bit of a bump. So as tempting as it might be to trade 15-minute big shadows, if you move to the daily or the weekly, you might find that they do even better. So, yeah. So I would be more tempted to trade. Like I don't even like I rarely trade the 1 hour charts. That's as low as I'll go, and it's only in a strong trend. Maybe we'll do a webinar on that system, but I don't, because that's not in the book. But I really don't like trading. I just don't like trading. 5-minute chart. The problem with that, guys, is many of you may not know, I'm a psychologist, and I can tell you the nucleus accumbens is that area in your brain that's activated when you trade the lower time frame charts, which is the same area that I hope I spell it right. Same area that's activated when you do drugs, have sex, gamble, all that stuff. So it's very addictive, and it's very difficult to plan your trade when you're in that mode. It takes a special type of person. You have to have really hard and fast rules. And when you're trading the daily chart, it's completely different. Even the 4 hour chart is completely different because you don't activate that. So it's quite critical that you understand that, because traders think that they make more money by taking more trades. I have a friend, Dennis. He trades very similar to the way I do, and he just trades naked, and he takes 1 or 2 trades a month, and his record goes back years of making money, whereas everyone else is sitting there watching the 5-minute charts or the 10-minute charts or whatever, spinning their wheels, and Dennis just sits down, takes a trade once or twice a month, and that's it. So I'm not going to get in the whole debate about that. It's obviously, if you're good at executing your system, taking more trades is going to grow your account faster, assuming you're not pulling it out to pay for milk and stuff like that. But the problem is most traders really fall flat on their face when they try and overtrade. It's a real issue for the majority of traders. So MDMA full effect, yeah, no doubt. Okay, so are there any questions about the live markets, guys? So the pound yen, we were talking about that. I mentioned my ideal move for the pound yen would be for it to get right here to where this little arrow is, and then print a bearish candle, and then I'll sell it. I really wanted to get to this level up here. That's at 138.15. 138.15. You can get up there and print a bearish candle, like a red candle, like one of these red candles here. I will sell it. Any other charts that you guys want to see before we shut it down? The other two that I've been watching, which are probably not going to be, they're not going to work now. The pound New Zealand, I was looking to possibly sell here, but definitely not now. And then the Euro New Zealand, which would be a sell off this level here. But the longer it sits here and flatlines, the more likely it is to step up. This is starting to look like a potential bullish trend where it moves up, sits here, moves up, sits here. And again, you would look for big shadows at the end of that retracement move. But I was looking to sell it off this level, but the more candles that sit here and touch this level, the more likely it is to break out. I'm not too sure about selling here. I would rather sit tight and see if it can explode back up. If it makes another explosion up, then I would say we're in an uptrend. And we'll definitely take out this high or at least test it. So Euro yen. Yeah, Euro yen, no problem. What is my Euro yen? So, oh yeah, this is an awesome chart. I love this chart. Show you. This looks suspiciously like the beginning of an uptrend. This is my Euro yen 4-hour chart. Again, as we were talking about before with the big shot at the end of the retracement, I would consider this to be a strong trending move. Now, it could come down and double bottom, but I doubt it. I think what it's doing now is it's flagging down, and you're eventually going to see a bullish big shadow like we were talking about before, and that could be an entry to kickstart a move up again. So I think this is a brilliant looking setup, and I think I would love to go long. And the ultimate target would probably be up here at 117.30. So that, let's say that it pulls back a little bit more and tomorrow gives us a bullish candle. You might have like 40 pips, 50 pips of risk on that, and then a target of 120 pips or 110 pips away. So that could be a potentially really good setup, but we'll see. It's acting like it's in an uptrend and it's pulling back, but it still needs to get out of that and take out this high here to you know, but I think that's what's going on there. I really like that one. That's an awesome chart. Who said that? Wana. Good chart. Any other ones before we shut it down? Just so I'm clear, guys, on the big shadows, I want to make sure that I give you the optimizers. So the optimizers are... I don't know how to spell optimizers. I did that wrong, didn't I? Optimizers. So the optimizers are that you will trade the candles with a close on the low or the high. You do not want to have a wick on these, especially if it's a bullish one. You want to see that close right up near the high, and if it's a bearish one, you want it right near the low. That's really critical. Number two is largest over past 10 candles. So if you're looking at a big shadow, make sure it's the largest candle last 10. And obviously, beware of the ginormous candles. No trades on ginormous. The ginormous candles, although they're very tempting, they just typically won't work. So I just want to make sure that you guys have the optimizers here. Candles have to close around the high or the low. Make sure they're the largest of the last 10 candles. And then when it's a ginormous candle, which is completely way too big and way different from the, you know, the recent history, which is usually like a factor of 4 of the ATR. You know what I mean? 3 or 4 times the ATR, then you know this is like alert, alert. This is not a normal situation. Retreat, retreat. So those are the ones you want to stay away from. So that's basically it. I really appreciate your time. Thanks to those of you watching the recording as well. I wish you very happy trading. We'll see you in the next Naked Trading webinar. I hope you have a wonderful week and keep testing in Forex Tester. That's where we earn our pips. So we'll see you soon, guys. Bye. Take care. Bye.